Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Mathew. This show gets you answers to all of your stock-related questions, and I'm sure that you have a lot of them today, given what is happening in the equity markets. By the way, in case you've got questions for us, you can send them on that number that you see on your screen. Let's take a look at where the markets are right now. And you've seen quite a bit of selling all through this session today, intensifying as we speak. For the benchmark Nifty 50, we're trading at very close to the low point of the day, close to cuts of 1.5%, and we've broken below 25,500 on the downside. The broader market's also seeing quite a bit of pressure. The mid-cap index down over 1%, 1.25% as I speak to you, and you have the small-cap index that's losing even more ground, down 1.3%. Now, before we get into the sectors and individual stocks, let's talk about the context. We were on a break, and there was quite a bit that happened in the geopolitical sense. Globally, you have an increase in the tensions in West Asia that hasn't really had a major bearing on global markets, but you have seen an uptick in crude to a certain extent. Brent trading at very close to $74 to the barrel. And you've also seen action in US Treasuries. Now, not too much to speak of, so it's interesting to see that the Indian equity markets are selling off so sharply. There is a risk on trade in China, and you've seen quite a lot of flows moving towards China, so that trade is on. Perhaps some amount of selling taking place in the Indian equity markets. On the institutional front, we'll have to see if that pans out in the numbers. Let's also talk about the key sectors, because earlier today, you had metals that stood out as the key gainer, but that has changed. In fact, metals are trading flat right now. Let's pull up the list of sectors just so that you get a picture of how weak things look. In fact, metals also slipping into the red right now. All sectors, all major sectoral indices now trading with cuts, and sharp cuts at that. You have realty, which is the worst performer, down about 3%. We were speaking about that just a short while back. And that's on account of a weakening in the sentiment on the residential front. Auto losing ground, IT down about 1.5% or so. No room to hide really in today's equity market. Now, there are a few stocks that are worse hit than others, and among them, we've got Dabur, which has signaled that the profit and revenue is going to dip in the second quarter on account of low consumer offtake. There's more to it than that. And it has to do with inventory levels as they stand right now. And Mahima is joining in to give you some perspective on this one. It's been a clear disappointment, Mahima. What are the reasons why?
Absolutely. So Dabur Q2 FY25 update has been, not just a bit, but it has been disappointing. And this is because they expect operating margins to decline, in mid to high teen levels, and they expect revenue growth to revive from October 24. Now, what they said is that they expect revenue growth, they're seeing mid-single-digit decline in consolidated revenue overall. Now, this is on the back of multiple reasons. First off, heavy rains and floods across India has impacted the overall consumer offtake in Q2 FY24. Plus, there has been a significant shift that has been seen to quick commerce and e-commerce, that is the modern trade from the general trade, and that is why there are high inventory levels when it comes to general trade. And the management is now, taking up the shift from general trade to modern trade, which is why there are high inventory levels and margins will take a hit. In terms of international business, it has registered double-digit constant growth, and in terms of beverages, it saw some impact due to heavy rains again. Now, in terms of what brokerages have to say about Dabur? Well, MK has downgraded Dabur to add from buy with a target price of 650, which is cut down from 750, and they're seeing earnings cut between 8 to 11%. However, they remain hopeful of business recovery in near future. Now, City on Dabur, they've maintained sell and they've reduced the target price to 570, which gives a downside of roughly 8%, and the stock itself is down around 6% in trade today. And they believe that quantum of impact of inventory pileup is fairly high and roughly 10% on growth, and they've cut FY25 to 27 estimates, earnings estimates by 3 to 6%. And they forecast 5% decline in consolidated revenue, 17% decline in EBITDA, and 19% decline in recurring PAT. Lastly, Nuvama on Dabur, that is maintained, this is a very contradictory note. They've maintained buy with a target price of 760, which poses an upside of 23% from its Tuesday's closing price. What they're saying is that they are expecting some near-term pushback for Dabur. However, they expect A&P as a percentage of sales at 7% in Q3. They're expecting EBITDA margins to fall roughly by 213 basis points, and they expect consolidated revenue to fall around 5% again. But there was a very interesting note by Jefferies also on India Consumer. What Jefferies has said is that Dabur is expected to report a decline in operating profits, but they do not expect this same trend for their peers. And lastly, what they're saying is that unless the management commentary is positive in H2, there's a possibility of some correction in the entire staple space.
Got it. Thanks so much, Mahima, for getting us those details. Let's bring on board our experts for the day. We've got Kush Bora as well as Vineet Pulinchkar joining in. Thank you so much, gentlemen, as always, for taking the time, and always a pleasure having you. Vineet, what do you make of the latest numbers from Dabur? And is it individual pain, or is that likely to bleed across to other FMCG players as well? It's down about 6% in trade today.
I think it would be specific to Dabur. Number one is that, we were always uncomfortable with the valuations of Dabur. Even today, as we speak at 583, whenever we build models on Dabur, we find that the valuations look expensive. And hence, we have never recommended this stock. So for us, we are seeing the true value of Dabur discovery happen. And I won't be surprised if the stock falls by another 40-50 rupees.
So that's something to bear in mind, and from that perspective, you should plan if you hold on to Dabur. Incidentally, that is the perfect opportunity to jump into the query segment on this program, and we've got quite a few that have already come through. Let's take the first few questions, in fact, and actually, before we do, let me go across to you, Kush, on what you make of the key levels to watch right now, because a lot is changing even as we speak for the benchmark index as well as for the bank Nifty. So if somebody is trading, what are the key levels to watch out for?
Hey, hi, Alex. Hello, Vineet. Well, I think, the indices have gone into deep oversold territories on the hourly chart. And, there could be this temptation of perhaps playing for a rebound. My suggestion would be to hold on to that temptation, not give in to it. The fall has accelerated after, an attempt at recovery. So I think from a level perspective, what you're looking at is at 25,300, as the next immediate support zone for the Nifty. If that gets taken out, incidentally, the 50-day moving average comes in at about 20,000. So the first step from here would be 25,300. On the bank Nifty, what you're looking at is a 51,700 kind of a support level. So these are the next two key levels to watch for. As I said, despite the kind of oversold hourly charts, the PCR is still indicating that there is some room on the downside. So you might just want to be a little watchful. As I said, only because the markets have cracked a bit, doesn't really make a strong case for buying immediately.
All right. So that's what you need to bear in mind, at least with regard to the levels on the benchmark. The first question coming through is on BEL. And this is a question coming from Chalam, who's writing in from Andhra Pradesh. Bought BEL at a price of 307 rupees a piece. The stock is currently trading at 282. And so therefore, it's a considerable loss because he's picked up quite a large chunk of shares. I'm going to come across to you, Vineet, on the fundamentals of this one. If you're holding significant quantity, if you've lost ground on this, would you hold or would you average at this price?
Which stock are we referring to?
We're talking about BEL, Bharat Electronics.
So, what I believe is that all the PSU stocks are overbought, and there is some chance that, there could be some selling happening in these stocks. We have to understand a couple of things that, the market is, although may look oversold, but, there is a long way to go. I'm looking at levels below 25,000. And in that, we could see some margin calls also happen. And that could lead to lower selling in, where people are holding on to these stocks for a very long time. So BEL could get sold much lower. And so I would wait on this.
You would wait. But would you would hold or would you exit and take the loss, Vineet?
No, so the fundamentals are very strong. So if you have a long-term view on this stock, then I don't see any reason to sell this stock. But other than technical levels, as I'm saying, we are playing to the tune of what's happening in the macro scene globally. And in that, I think there could be some sell-off from current levels.
All right. We've got Mahindra, whose question is on Wellspun Living. He's bought at levels of 154 for the long term. He's wondering what he should do. He's writing in from Baroda in Gujarat. He's in the green. He's holding on with gains of close to ₹1,00,000. Kush, for somebody who's bought at levels of 154, would you suggest holding on? He's in no hurry to sell.
I think his pain must be the fact that the stocks actually dropped from 210 levels all the way down to 170, and hence the loss in profit that he's looking at. Now, while it's a very good level that he's bought at, and he's still in a profit, it's not a bad idea to hold this one with a TSL, a trailing stop loss of about 160 to 165. That's the support zone. If the stock were to fall, below that level, you'd still exit in a profit, albeit marginal. So hold on to this one. With a stop loss of between 160 to 165. There's a rebound on the card. 177 is the level where the 20-day moving average resistance is. Once that is taken out, the stock could make a move towards 185 as well.
Ujjivan Small Finance Bank, the quantity bought is 900 for a price of 48.65. This is a question coming from Karthik. He's writing in from Chennai. He's asking whether he should hold or exit. This loss is not very significant. What would you do with this one, Kush? What are the charts looking like?
Exit. Haven't been a fan, of this space for a while, and the stock particularly hasn't really, recovered from the selling pressure that we've seen from somewhere early this year. So there isn't any recovery also on the cards, and every support zone is being taken out. So my suggestion is that you might want to consider an exit, switch to maybe some of the bigger names. That doesn't really fit the bill. If you're into a small stock like this, but the bigger names like ICICI, SBI, they make a lot more sense right now.
Vineet, not a specific question, but an interesting one coming from Dr. Ananya. She's writing in from Bengaluru. She's asking about two spaces. One is IT, and some people are still underweight on IT, despite the fact that you've finally seen the rate cut. I guess to a certain extent, they're anticipating that some pain in the US economy will continue for some time. And so, therefore, a turnaround in earnings will still be a while away. What would you say about IT right now from the perspective of the long term, and any opportunities that you see in new renewable energy?
So, IT from my point of view is a sell, because, we are anticipating substantial negative news coming in the US market, and with AI proliferation at breakneck speed, jobs are going to get replaced. So we do not see much positivity in the IT space, and I would thoroughly recommend exiting those counters and, just sitting on cash. As far as the renewable space is concerned, there are certain stocks which you could look to buy on declines, not today. But I think NHPC looks very, very good for a buy.
NHPC, okay. And these are long-term, of course. It's not done too much over the last 3 months or so, down 7.5%. IT, by the way, incidentally, has done incredibly well over the last 3 months. It's a sell. Let's talk about Bhavdeep Sharma's question. He's writing in from Punjab, and he's asking about Mazgon Dock Shipbuilders. His average price is 4,500, and he's looking for a short-term recommendation. He's actually saying long-term and short-term. Kush, perhaps we can look at both charts.
Sure. So first thing, the stock is under pressure, but you'll take heart from the fact that the volumes on the downside are now starting to dry up. So that is not to say that the downward pressure is over, but that the incremental downward pressure might not be as heavy. A positional stop on this one comes in at about 38,500. That's a medium-term support zone. So you might want to consider that, if you're holding out for this one, at least from the medium-term perspective. Long-term, I think the stock had rallied quite a bit. We all know, the kind of returns it has made. So, in that context of things, this sharp profit booking is also par for the course. If the long-term perspective is looked at, then 3,500 is the very key level to watch for. If that gets broken, then the long-term patterns get negated. So from the near-term or medium-term perspective, 3,850, and on the downside, 3,500. These are the levels to watch for. If they get taken out, then you might want to exit. Otherwise, continue to hold. This consolidation is healthy, and the stock might start turning around probably in a month, maybe a little longer than that. But as I said, the selling seems to be coming to an end, or at least thinning out.
Let's pull up the chart for Ola Electric and see where it's currently trading. We've got Mohit from Noida who's picked up at price of 120. He's got 200 shares and he's losing a little bit of ground. In fact, today as well, he's losing about 2.5%. Vineet, a lot's been said about the developments in the two-wheeler electric space, with a sizable chunk being taken by electric mobility now. But still, it's space that is continuing to be dominated by internal combustion. Of course, there are some wild predictions about how quickly this will change over the next 5 years or so. Where do you stand in this argument, and would you hold on to Ola Electric at bought at prices of 120?
So you know what? There's a lot not happening for Ola. So number one is the recent issues around issues around service and quality of the product. Third is that the other boys, which are the typical ICE engine boys, they're also gaining market share on Ola. So these things don't augur well for Ola. And at this point in time, I would just wait on this stock. And because if things don't work out for Ola in the short run, then we could see some even browbeating happen because the stock was priced expensive.
Yeah, that's a fair point. From one auto player to the next, and this is Tata Motors that we're talking about, completely different picture here. We've got Vivek, who's bought 300 shares at a price of 984.6, and the stock is currently trading below that, 931. Vineet, I'm guessing from the perspective of global markets, there are question marks about the outlook for Jaguar Land Rover based on your expectations on US, right? So would that hold true for Tata Motors as well?
So I think, Tata Motors is a perfect sell call, and it's a contra call to the market. Everyone is loads bullish on this stock, and I have my reasons for this. So one is we are seeing this turmoil which is there in the Gulf is going to obviously hit consumer sentiment globally. Number two, CV sales are slowing down. PV sales are also slowing down. And that does not augur well for Tata Motors. Also, competition in the electric space is going to increase from Maruti because they are going to launch their vehicle. So I think that Tata Motors, I would sell on every rise.
Sell on every rise is the call on Tata Motors. And as Vineet has pointed out, that is in fact a contra call. I'm not able to pull it up right now, but I will hazard a guess to say that most brokerages that cover this will have a buy call. I'm pretty sure that I'm going to be right on this one. Gautam from Mumbai has a question on United Spirit. What's the upside potential of the stock in the next 8 to 12 months? I suppose that is going to depend on liquidity on multiple fronts. Kush, you want to take this?
For sure. This space has done well, but there have been pockets where not the entire sector has really moved up. This one, United Brewery, some of these names, quite stand out. I'm actually quite glad to see the kind of dip that the stock is actually witnessing right now, because this makes it a good entry point. But the medium and the long term trend for this one is quite intact. So, if you don't have it, you might want to accumulate. If you have it, you might want to continue to hold. Positional stop on this one comes in at 510, 1510. That's the level that you're looking at on the downside. And, on the upside, the levels that you can look for, let's say from, a 9 to 12 month perspective, is 1700 as the first target. And once that is taken out, perhaps even 1900. So quite bullish on this space. A handful of stocks in this space doing well. This is definitely among the top three.
And, liquidity during the week boding well for this stock. Liquidity on the weekend also boding well for this stock. Let's talk about the next one, Lemon Tree Hotels. We've got Gaurav Nyogi, who's writing in, who's bought 100 shares. And I believe the price is 54, and that's quite an attractive price to have bought this stock at. I'm curious what you make of the hospitality space, and specifically on Lemon Tree, Vineet. This is a company that has moved away from the traditional model, and that seems to have worked well on the fundamentals. It's work in progress as I understand it. Have you looked at the numbers of late, and what do you make of it?
So, as we stand and, the stock was a buy for me. But, with this war kind of scenario breaking out, I think international travel is going to take a hit. And considering all those things, I think occupancies could fall a bit. And given that, I would look to buy this stock on declines, maybe, a couple of months after this situation kinds of plays out.
Yeah, that's a fair point. All right. Darshan Mandviwala, who's writing in from Surat in Gujarat, is looking to invest 20,000 rupees, and he is looking specifically at Varun Beverages. He's contemplating buying 5,000 and holding 15,000 in reserve for a potential drop in the price next Navratri. He says that he can hold for 1 year. He needs both fundamental and technical opinion. What are the best prices to deploy at, Kush? If you're talking about 20,000, what strategy would you employ?
Well, not a bad idea to deploy some right now. Not a fan of waiting out, at least to, invest what I refer to as a tracking quantity. So once the stock is in your portfolio, you do start tracking. So not a bad idea to, deploy some right now. Also, there is a 200-day moving average that comes in at 585. If that gets broken, then, on the downside, you're looking at, 550 to 565 kind of zones. So I would deploy some, the 5,000 that he's looking to deploy. Not a bad idea to, start with that right now. The rest you could keep for, if the stock does fall to, 560 kind of territory, that's when you could go ahead and pick some more. So, and the stock has been outperformer. It's in a consolidation phase right now. So good time to enter a stock when it's in that consolidation phase and not on the way up.
HSBC had a note earlier the week with a buy call and a considerable upside. The stock is currently down about 3%. Vineet, is this a buying opportunity or would you wait for a bit?
So I'm very bullish on Varun Beverages. Okay, and you should use this dip that over the next couple of weeks we see playing out in the market to accumulate this stock.
I'm coming back to you. Raymond is the name of the counter we're talking about. Sudarshan is writing in from Noida. Vineet, bought at a price of 1856. The stock is currently trading at 1715 or thereabouts. Would you hold on to this for the long term?
Absolutely. The kind of noises that Gautam Singhania had made regarding business transfers to India, I think this stock should be held on and this stock should do well.
No worries about the shift of the suiting to other options or the clothes business. Any concerns at all there about volumes?
So, what has happened is, try to understand the cycle. It typically takes 9 months lead time to place orders with a garmenting business. Raymond has an entire fabric to garmenting, right? So they capture the perfect value chain. And for people who were wanting to shift business out from Bangladesh to India in very short period of time, Raymond was the best play. So I think to that extent, Raymond will do very well, given all these factors. And, as a percentage of the marriage spend, Raymond's market share is only expected to go up.
Hindustan Construction Company is the next company that we're talking about. Stock that we're talking about is down about 3% in trade today at 42. We've got Ramesh from Chennai who's bought 20,000 shares at a price of 47 rupees. Kush, this is another one of those where a lot of retail investors tend to bet big on this particular counter. Would you suggest holding on? What's the strategy that you would employ here?
Once again, Alex, a very similar pattern where the stock is in a downturn, but the volumes on the way down haven't really been as big or as detrimental. However, the price action has been. My suggestion would be there's a 200-day moving average support at 40. He is already looking at, a loss. If he can bear some more, then hold on to this one with a stop loss just under 40, maybe, about 39.5 and continue to hold. Once the volumes start to pick up, this stock could very well show a turnaround from this key support level. So hold on to this one, with a stop loss at about 39.50, 40 kind of levels.
Okay. We've got Rani who's asking about IRFC. Basically, the question is, kitna niche girega? Kush, do you have a view on this?
I think I'll have to bring out my crystal ball for this one. But technically speaking, the two levels to watch for are 140 144, and once that is taken out, you're looking at a 133, 135. So I think these are the levels that I'll watch for. It's already broken the 200-day moving average. Not today. In fact, for the last 3 sessions, it's been trading below that. So I will be a little watchful on this. So 144 and 135, I'm just rounding it off. These are the key levels to watch for. The stock could tend to move towards those levels. So just be a little watchful on the downside.
Unfortunately, we're completely out of time on that note. And Vineet as well as Kush, thanks so much for joining in, for answering all the questions that you did. Always a pleasure speaking with you on this program. All right, like I said, we tried to address as many questions as possible over the course of the last half an hour. If we missed you out, it was not intentional. And hopefully the conversation we've had so far today has benefited you, even if your question was not answered. We've got lots lined up over the course of the day, so do stay tuned. This is NDTV Profit.
Hello and welcome. This is Hot Money. I'm Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade.